Hello and welcome to Macro Mondays here on Landy's Crypto Corner. Today is August 5th, 2024, and we're going to follow up with a little bit of a longer video today looking at some of the longer term timeframes, but we have something very pressing to talk about that's staring us right in the face on our chart here. Since we last spoke on Friday, Bitcoin has hit our target 1 of distribution down here. It even wicked through it, and I'm actually going to talk a little bit about why this is two separate areas between target 1 and target 2, because I did get a few questions about that. But yes, this is two separate areas. Bitcoin did wick through it, hitting about $49,000, so about $1,000 lower, about 950 bucks lower than the actual zone itself. But because this is conditional, meaning that we're looking for closes inside of this zone, this is or has essentially played out one of the scenarios and could potentially play out this scenario further into the future. But I talked about on Friday where Bitcoin had, I believe, where was Bitcoin? Was Bitcoin at the top side of the risk zone? I believe it was on Friday. Now, that would have been, yeah, so Bitcoin had just come down and broken the uptrend here. So Bitcoin had gotten its close below the 63 2 to 3 level, and the next big area that we were looking for Bitcoin to head to was the top side of these candles around 62 to the top side of the risk zone at $60,000. And I had mentioned that it was very important for Bitcoin to hold that area around $60,000 because below there we'd be looking at the bottom side of the risk zone, top side of this danger zone here, and that is at 58.4. And if we saw any closures below there, we'd be looking to 56.5, and then subsequently any even medium-term time frame closures below the daily, below that 56.5, we'd be looking for this lower low to get run into the actual target 1 of distribution. That is now what has occurred, and it was an exacerbated move. I'm not going to get too far into the details, but essentially, a lot of things were already trending down. On July 31st, Japan raised their interest rates by 25 basis points or 0.25%. And this is up from zero. And a lot of Japanese firms and traders and so on and so forth were using leverage or loans of the Japanese yen to go and basically transfer to dollars and buy stocks and Bitcoin and other currencies as well around the world and invest in other markets. This was a surprise to those investors on the 31st, and subsequently they had to unwind their positions. That is why the severity of the moves across all the major markets in the world actually got exacerbated to the downside. Things were already pretty shaky last week in traditional markets. Bitcoin wasn't feeling the hurt as badly, but once it broke trend, that's the opportunity to push it down quite far. Now, I know some other cryptos have dove much further, and realistically, we're looking for Bitcoin to lead this market. So, we're going to stay focused on Bitcoin and where things could be headed next based on conditional analysis. Conditional analysis means that a condition must be met in order for me to start entertaining looking in a specific direction or towards a specific zone of interest. And in this case, we do have a couple new things going on with this chart here. And this chart's going to change quite a bit. But in terms of evaluating the downside, if we do see Bitcoin closing back below the wick low here, which was the prior lower low of the range at 53,500, then I would be looking right back into target 1 of distribution here at $53,000 down to that $50,000 area. And then that would even, if it does start trading around $50,000, that opens up this wick low now at $49,000 to get ran. Potentially, a tap on the target 2 of distribution here at that 48 to 40. And generally, when you hear me talking about this, just give it some room. 45 to 48 is target 2 here. So 48 to 40 is the actual number here on spot. down to the 45.5. Now, this is a big monthly lower high from the bear market. This was the lower high that actually kicked off the bear market last cycle. So this is a very important area. And you can see I've added this teal line or teal dotted dashed line, whatever you want to call it, horizontal even. This is where the current electrical cost is. And I actually want to sear your eyes out of your head for just one moment. This chart is white, so I am going to give you a moment to prepare. All right, here we go. This is caprioli.com. Let's go ahead and refresh. I want to see if if it actually refreshes. Yeah. So this is actually doing what I thought it would do, and this is good. This is what you want to see, bulls. This is where the floor for electrical cost is. On my chart, it's at 45.5. That dotted horizontal line in teal is 45.5. And we actually see that as of today's closure, yesterday's closure into today's candle, I should say, it has moved up again to around 44.8. So essentially it's around $45,000. So the electrical cost, we can move up for today for the moment. Let's go ahead and update that. We'll just call it 44.8. That's close enough. And we'll get that on the board. It was 44.5 as of yesterday. So we'll do 44.8. But essentially, the electrical cost is the baseline, metric to mine Bitcoin, right? It is the absolute floor. It is just accounting for electrical cost only to mine Bitcoin on the network. So 44,800 is essentially a part of target 2. But again, there is a gap between target 1 and target 2. And we can even see that Bitcoin spiked the ETF high perfectly on its move down here at 49,100. 49,000 was breached on some derivative exchanges, but here on spot price, it did just hit the ETF high before the big dump off into the monthly there at 38,500. Oh, hey, there is another target 3. Yeah, so we're going to talk about electrical costs in just a moment, a little bit more, but just in case things get really bad, we do need to have extra targets on the table. Now, again, conditions need to be met. At this point, we need to see $50,000 or the bottom side of target 1 break down. So this zone between 53 and 50, we need to see 50 break down on a closing basis. And of course, we would need to see closes below the wick low now at $49,000 to get continuation into target 2. That doesn't mean that another giant rundown and wick can't hit target 2, but we need to see, for consistent structure in these areas, we would need to see closures below $49,000 to go hit target 2 of distribution at 48,240 to 45.5. Now, I still think whole numbers are probably going to be the best bet on any kind of really aggressive downside move, but that monthly is roughly $45,000 to $48,000 with the electrical cost just below it now, creeping up towards $45,000 at 44,800. Now we're going to come back to that. If things got really extreme, we're talking, people are calling this a black swan. Everybody knew what was going on with the carry trade in for the Japanese yen. Like, this is not a black swan by any stretch of the imagination. This was something that was easily predictable. And I also will tell you, for those that maybe haven't been around and listened to me or watched my videos before, I am of the opinion that March 2020 was not a black swan either, because there was a lot of other data that was telling us where things were going to go, and all it needed was a little bit of goosing from the news side of things to really push things further down in the direction they were already headed. For instance, there was a weekly downtrend at that point already well in play, and a recent rejection right before the March crash. So, not really a black swan. I know a lot of people do classify that as a black swan because it did surprise some in the market, but we were looking for some of those levels even back then. But this is definitely not a black swan. We knew what was going on with the carry trade in the Japanese yen. So anyway, but if things really did get bad, I would be looking down to another level. And yes, there is a gap in here because I would want to see closes below the electrical cost basis at around this, 45, 44.8 level. And then bearish reclaims of this, pre-ETF range before the big spike up. And then essentially I would be looking down to a big area on the monthly around 42,500 to 38,500, which is a monthly closing area, a very important one at that. So, that would be the next big area that I would be paying attention to if target 2 and the electrical cost is closed below. Now, we're going to jump back to the Caprioli chart, so I'm sorry for your eyes. But this is something that I've talked about in video form many times, and here on the actual I meant to say spaces form many times, but I've also talked about here in video form. But one of the things you got to understand that has happened in some of the more extreme scenarios is that Bitcoin has spiked into that electrical cost, and you can see that back here in March of 2020, Bitcoin during that time period spiked the rising electrical cost at that point. Now it did leg down after getting hit, but we do have a scenario where Bitcoin is only, it's trading pretty significantly below the production cost, the total production cost. So we've got total production cost up here at 63 still. So this is another thing that I've talked about. Just post halving, you see Bitcoin pump out of the capitulation, which is minor capitulation in this case, not price capitulation. This is minor capitulation. It pumps out of it and then comes back in and kind of hovers in between total production cost and electrical cost. Well, you see Bitcoin pumped out of it. Now it's back inside of that total production cost there at $63,000. Now, in this case, if it is going to, if a further downside move is to come to fruition, I would be looking for it to possibly spike into electrical cost. In really extreme scenarios, you can see like in March 2020, it did spike through it, but it didn't close under it. So, that's kind of where I'm getting this zone of target 3, because wicks can kind of land anywhere, especially when you're looking at derivative exchanges. Keep in mind that I'm looking at Coinbase Spot here. So that is, the downside areas to be aware of. So let's zoom in now and talk about some of the criteria that needs to be met to the upside. You can actually see that Bitcoin is trading right around an area that I need to see recovered. So we had the prior range low. Now we have a new low. It's not even a range at this point. This technically was a, it's a falling wedge. It's still actually a falling broadening wedge for the pattern traders out there. But in this case, 53,500 did get closed above, which gave us the bias that, closing above here, likely going to go and test this close open on the lows at 55,850. We see that Bitcoin did do that in the early portion of today's trading session. So it's still Monday for me, but Bitcoin is in the Tuesday trading session now. So it did trade up towards a very important area that it needs to reclaim. Of course, this closing low at 55,850. And then subsequently, we need to see 56,500 closed above. And then, of course, 58. So you can basically, you're just walking price back up in terms of horizontal resistance. So we need to see 58,400 or so closed above. And then from there, we need to see 60,000 to 60,300 closed above. That would put Bitcoin back in the range up here. But you can see, because this move is so extended, even on bounces, and realistically, we got to see a low put in first. Like, this could be the low. We don't know that yet. We need to see at minimum a closing low. So for instance, as it stands right now, for this to even be considered a low, we would need to see price closing all the way back up here at 60,674. You might get some people saying, no, it's going to be 58,131. That's not an actual low set. You've got railroads spikes there with with one driven a little bit further than the other. You need to see at least a third candle at that point. If we were just going to see a downside move and then a move right back up to set a low, it's got to come in above around 60,000, 675. So basically 60,700 or so. But, if this candle closes like this or pushes up a little bit more, then that criteria becomes wherever the swing high is for today's daily candle, but preferably to set the closing low. For instance, we see the Tuesday candle rather here move up, then we would need to see the Wednesday candle to set a closing low, start closing about 58,131. That would set a closing low. And let's go ahead and take a look at our RSI just to see what's going on here. Yeah, there would actually be some nice bullish divergence and a pretty extreme read of that as well. So that does not mean that Bitcoin is just going to reverse trend and it's bull party on to the upside. We need to see trend build at this point. So we're more likely going to see a lower high on Bitcoin before the trend changes, because as it stands right now, to break this current downtrend, because we do have a trend break of the uptrend, to break this as a downtrend or make it an anomaly, which it is not, of a trend break, it would need to close all the way back up here above $70,000. And I don't see that happening unless we get some absolute chads in the market that want to really run price up that high that fast. And I wouldn't trust it if it did move that high that fast, to be quite honest. We would likely see some significant overhead resistance. So essentially, and this is just going to be LARP lines. Do not take this as these are the areas that I expect Bitcoin to go to. So disclaimer right now. But I just want to give you the idea of what I'm looking for. So we've got the big trend breakdown. And then I'd be looking for, like a lower high and then a higher low or equal low. So we'll just put it as a higher low and then start to form trend up like that, right? So that's essentially what I'd be looking for. Some sort of a lower high, higher low, go break that lower high that it makes. This is not this is not representative of what I think Bitcoin is going to do. I don't do the whole LARP line thing. I know a lot of guys do, and are very good at it. They can, it plays very closely, but it's still more luck than anything else. So essentially from here, you want to see the closing low regained by the bulls on a daily close. So you see Bitcoin is pushing above there right now. Subsequently, you want to see 56,500 regained, and then you can move that target up to around 58,300 to 400, 58,300 for this closing low over here, 58,400 for the wick low of this big downtrend here. Then above there, you want to see the closing structure right here, this significant area of support with some order blocks in there at that 60,000 to 60,300 regained. And then from there, we can start looking back to the top side here, somewhere around this high. And this chart is going to change coming into our next video here on Wednesday. So it is going to look a bit different, but I will keep you updated on what the thesis is and the reasoning why. But essentially, I would be looking 62,800 to 63,800. You can probably call it 64 up here. And then above there, our 65.5 zone, which is this high over here. And then, of course, 67,200 to 300. So that's not going to change. The only thing that's really going to change is, the 68 to 70 area up here. That's the primary overhead resistance. And I think the next time that it goes up and actually closes above 70, well, it's going to be all good in the hood and probably bull party on. Now, I don't think right away, I don't think it's just going to close above 70 and then moon. But, that would be a significant downtrend break on the longer term timeframes. So let's go ahead and get rid of the accumulation distribution areas here. Let's go ahead and move this into that because we're going to readjust that chart. Don't worry, everything that I just told you about that particular chart still going to be valid. And then when I readjust it, it's just refining the levels for myself and for you. All right, so let's go ahead and take a look at the weekly. And I had mentioned this, now it would be 2 weeks ago, or last Monday, I should say, when we opened last week's bear candle here. It was, pushing up above, in the early going of the week to that $70,000 area. But I had mentioned this is an ugly candle. This is your evening star, your doji reversal candle setup, and basically close above the top side at 69,500. You're gonna go test the highs. Close below the bottom side, you're setting a high. In this case, it would be another lower high. Now for swing trend, still lower lows, but if Bitcoin can maintain by the end of the week closes above 55,800, that lower low close on the daily is also the lower low close on the weekly, that 55,850 or 55,900 basically. That is going to be the area that you want to see closed above by the end of the week. We will revisit this on Friday, but essentially, I would be hopeful that if bulls can reclaim that they can keep price localized here. One of the main reasons why I say that is because the longer that Bitcoin kind of keeps dipping below this low, it's more likely going to go and sit in some of the zones, target 1, 2, or possibly 3, getting hit and then having daily reaccumulation, so distribution to reaccumulation on the daily time frame, and then obviously that would start moving on to higher term time frames. Let's go ahead and turn on our Bollinger Band set here. For the weekly, of course, there is a trend line here as well. I mean, this is the trend line is broken for that broadening descending wedge. You're just going to get guys doing this, right? That trend line you can use for closes if you wanted. Still, if you're a trend line trader, I wouldn't suggest it. All the trend line bros got absolutely destroyed, longing around that $53,000 level. So they were adding a lot of leverage. And in fact, I can kind of show you, this is something I'll get to in a moment, but open interest is going up as soon as that area was hit because everybody's looking at the trend line. Yes, there's other ways to draw trend lines, but they're all subjective. So I would, I just advise using levels that are confluent with a trend line. So you have an intersection at that point with a horizontal level of support or resistance, no matter where you're using trend lines. In this case, downside would be support areas. So if Bitcoin can stay above the lower second of the Bollinger Bands here on the weekly, that would be preferable, which again is right around the low closes here, 55,900. I would want to see it actually a little bit higher. I'd want to see it regaining that 56.5 area just above, which is the other wick low of the range from pretty early on now that we've made a 53.5 and then a 49. So in this case, what would look really good for the bulls is come down, wick all the way through the lower second and third, and then come back up and close the end of the week above the lower first. That would look really good. And again, this is right at that 60,000 to 60,300 level that was ever so important that I talked about on Friday. So that would look good for the bulls. We're just at this point playing out scenarios, and in this case, this is a volatility perspective. It would still be in the weak half of the bands on any closes below 64.5. So essentially, it would still favor the bears, but it would start to look a little bit better than it does right now. All right, so we do have a kind of cross down back into a potential cross up because of how deep the wick went for a regular Stoke. Again, this is a regular Stoke, not a Stoke RSI. This is measuring close over close price momentum, not the velocity of RSI, which is what a Stoke RSI does. So this is a regular Stoke. For those that are TA nerds, this is running a 6.314 255 look back. This is your typical Stoke crypto settings. There is a free indicator that you can get. This is a paid one. If you want a free version of this one, you can search the store for BA Reverse Stoke or just Reverse Stoke, and it's by Trader Hali. And I believe they keep updating that one too, so it's nice. This current one that I have on here has a few other bells and whistles that I'm not going to describe at this particular moment, but that's one of the reasons why I use a paid one. Also, I like to support the devs over there at Eric Crown's channel. So this is a pivot of 53,800. So essentially, Bitcoin closing above last week's wick low would turn this back up. This would be an initial turn down. If we do see closures anywhere below on the weekly by the end of this week, below 53.8, this will confirm both the K and the D, pointed back to the downside. But if it closes above there, we're going to see this cross back up. Still not a strong signal. Still not something that I would take until I see some important levels regained to the upside and see some structure built on the daily, more importantly. As for RSI, if it can pick itself up off the floor here, and yeah, it's not nothing interesting. We're going to come back to this. There is, of course, hidden bull divs that will pop off based on this, but it's not anything too crazy. I did want to call out a few things on RSI, though. I want you to note where the bearish control zone is. That's currently sitting at 46,600. So bearish control zone is essentially right in between our big monthly level, just over the cost of electricity again. So that's our $48,500 to $48,000 level. And of course, that's just above our now 44,800 electrical baseline cost. So that is something to keep an eye on and note. And I'll be honest with you, just from not anecdotal, but from experience, if it is going to hit the bearish control zone, even bounces out, we typically tend to see it dive back in. You want to see bullish divergence and regular in-trend bullish divergence forming. And I'll give you, or historical bullish divergence like what we saw here in 2021. So, we had the big January 2021, and then you see the massive divergences between the two highs here into November. But we had the bullish divergence that got that lower high. Actually, let's not look at that because that's just going to upset the bulls more. But we would want to see regular bullish divergence while holding structure. I don't think that that's something that's going to populate, though. We'll see. In this case, just be on the defensive more than the offensive if you are a bull in this market right now. Daily is in full-on expansion to the downside. Looks like continuation of expansion anywhere below the lower second where it's currently tapping on right now. That's coming in at around 56,200. What was the high that just came in? 56,300. So, it's trying to push up and regain this low over here at 56.5. Would like to see that for the bulls. That would put it above the lower second standard deviation. And from the volatility perspective, keep in mind all of the support and resistance stuff that I talked about earlier still applies. But from a volatility perspective, we can then start looking to the daily lower first at around that 60,300. And just so you can see how nicely volatility levels line up with all the things that we've been talking about, like just take a look for yourself and you can see that lower first lining up with the area that I want to see regained and that I wanted to see hold for the bulls' sake. Otherwise it was down and that's definitely what we got. Lower second right here, basically bottom side of our danger zone. This is going to become a reclaim zone when I update the chart. But yep, not too much more to say in this regard. I will wrap today's video up by saying that kind of in my experience, moves like this that kind of you get the cascading effect, right? So we had the cascade effect across all markets. There's some emergency Fed meetings and there's like all kinds of other moving parts. So I wouldn't get too aggressive with claims or even, there's a lot of people that are just dip buyers all the time and will keep buying as far as it dips. If you don't have a lot of money, you got to pick your spots. So this is not financial advice, but I would at minimum be waiting for some reclaims. And then from there, just buying higher low structure. That's what I would do personally, not financial advice. Do your own research, all that good stuff. Um, but if it does, start to look like this is becoming the major low, which it might be, then start looking for structure to be built, and that is going to emerge from the lower term timeframes and then work its way up to the daily. And currently, I want to show you that that we have a low. We have a swing high and swing low in the same candle, but we still have a downtrend. This is an intact downtrend on the 4-hour, right? So this is a return to test the broken prior supports. As it stands right now, if it can start to reclaim, put in a high, put in a higher low, and then break that lower high, then that's going to be the safer plays for most people in these markets. But that has to also start to paint itself on some of the longer term timeframes that lead into a daily. So again, like I said very early on in this video, I would be looking for another lower high at minimum, another lower high on this move. Maybe a retest of the current lows, or maybe a retest of the lows right here, right now, and in higher low fashion or equal low fashion. But you just got to be on the defensive, because there's going to be a lot of moving parts in the traditional markets, which will have a bleed over effect into, the crypto markets. So yeah, I think that's going to do it for today. I want to thank everybody that came to my second Spaces event today, where I had Reese, an awesome artist who is bringing some stuff to Stacks here shortly with Blockweb, really cool art project. So Stacks being layer 2 Bitcoin. And just realistically, I was kind of floored by some of his art already. It was really cool. And then seeing that he's got a cool new project, I wanted to get him on. I'm glad I did. Also talked to Peace Love Music, who I met through the Welsh community on Stacks, doing some really cool stuff. I think both guys got DeGrant's stuff going on there, so they're working on some really cool stuff. But he's writing articles and doing podcasts and videos and stuff, talking about the industry, specifically on Stacks and Bitcoin, and kind of what builders are building, and probably talking about a lot of the community as well. So it was really cool to hear from them. And then of course, I want to thank everybody that came and hung out with us and listened to us. It was a really good turnout for myself, who doesn't have a very large following, although I can thank the Welsh community for really increasing that following. I think Killer of Supply actually blew up my account overnight. Appreciate that, buddy, with some posts about following me, and then was also hanging out in that Spaces event. So very, very cool stuff. Go listen to it if you get a chance. It's posted on X there. And if you're watching this on YouTube, you can just click on the link in the video description down below to follow over to my X profile, and you can scroll down. We did record that Spaces event. And if you're not familiar with what Spaces is, it's basically like a speaking panel, where you can, you have listeners in the audience, and then you have people up on the panel or stage, and yeah, kind of do it like interview format. It was pretty cool, and talked about, of course, what occurred in the markets today. So, I guess I'll leave you with this. Look for, I would say, between 58, the close here at 58. 58. 58,400 is what you want to see the danger zone recovered. But as a start, you want to start seeing, 55, 900 to 56K reclaimed. And then, of course, 56,500 to that 58.4, and then start to work its way towards $60,000. I do think that's going to be significant resistance at that $60,000 level, if and when it does get there, especially if it gets there pretty quickly, but we'll see. Maybe it can blow out some late shorts or something. And above there, I would not be looking for this just to green candle its way right to $70,000, although that is not unheard of for Bitcoin. I would still be cautious and defensive, as I do think we're going to see another lower high before any kind of a trend change. So we want to see that structure built. If you start seeing things closing back below 53.5, we're looking to target one of distribution again, 53 to 50. That, of course, now brings in this current wick low at $49,000. So, yeah, you have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And, of course, as always, stay safe. Keep an eye out for additional Spaces events that pop up on my timeline throughout the week. And then, of course, I'll be back at you on Wednesday with a shorter form video. And, yeah, I want to thank you again. You have a wonderful morning, afternoon, and evening. No matter where you are in the world, please trade safe. And, of course, stay safe. I don't know if I said that twice or not. I'm very, very tired. But, yeah, Landy out. Take care.